How the new property measures will affect you will depend on whether you're buying a home or looking to invest. The cooling measures took investors and analysts by surprise and come just 2 months since the buyer's stamp duty hikes announced at Budget 2023. That did little to curb demand for higher value properties. According to data from the Urban Redevelopment Authority, prices of private residential properties have been trending upward even during the pandemic years.
The cooling measures was done more to curb investment demand, both from locals as well as foreigners. I think for foreigners, it's mainly because some of these people are coming in perhaps to set up a family office. So we do see some of these headline deals, where some of them were paying quite high prices for some of the ultra luxury homes in the market. So we are expecting more mainland Chinese to come in as well, since they have opened their international borders. So if they were to pick up many of these luxury homes, it may potentially bring up prices, especially in the core central region. And of course, when prices continue to rise in the luxury segment, it may bring up the overall price for the whole property market as well.
Under the new cooling measures, a foreigner buying a $10 million property would need to pay an additional $3 million in additional buyer's stamp duty, or ABSD. For a Singaporean investor, that same purchase would require an additional $300,000 in ABSD. But some analysts contend that the measures haven't taken into account local first-time buyers who are not subject to ABSD.
Looking at the data for last year, a good 90% of the buyers were actually Singaporean and PR. In any market, if 90% are creating the demand to push the price further up, how can a 10% make a huge difference? To put things in perspective, the whole of last year in the mass market, OCR, outside the central region, the foreigners' purchase was only 1.5%, which means 98.5% were Singaporean and PR. Therefore, the demand is truly real from the aspirations of Singaporeans and PR who are prepared to pay the money. So how much can the price be corrected if this group of people and their aspiration is to own a private property in the mass market continue to come and pick up the units?
The first condominium launched since the ABSD hikes were announced was Blossoms by the Park in One North. It sold about 75% of its 207 units at its weekend launch, and 96% of buyers were Singapore citizens and PRs.
They were just looking at probably only 50% sell-through rate, but they managed to garner north of 70%. Majority of them are in first-year upgraders. So that tells you that there's still demand for properties. There's still demand to upgrade. And it's also a function of, say, the public or resale market being fairly stable. So if that is stable, and if home owners are able to get a good price in the resale market, then they will continue to play in the resale, private property, or even the new launch space.
But there are also other factors that could moderate prices. These include the current uncertain economic environment and the continued high interest rates from the US Federal Reserve.
Our thoughts are that the price index movement is up about 3% for the first quarter, should start to show signs of cooling off. I'm not looking for, let's say, a downward trend at this point in time. And it's based on our analysis, is subject to employment and also economic outlook. There's a closer correlation to that. So unless we go into a recession and there is risk of widespread, say, job losses, then there could be a bigger overhang on the property price. Apart from that, I think the property prices are expected to just flatten out for now.
Analysts say there is still pent-up demand in the market, even enough to match the expected supply coming on stream in the rest of the year. Another concern is that the new cooling measures may end up pushing up demand for the Singapore rental market, which hit an all-time high in the first quarter of this year.
foreigners who still look at Singapore as a safe haven from their setting up their businesses or their child going to school may opt for rental for the time being. Yep. And the fact that instead of paying a 60% ABSD, how about they stay for another 2-3 years in rental and apply for a PR eventually? Because once they get their PR status, from a 60% additional stamp duty, it drops to 5%. Therefore, it does make sense once someone who is truly interested in Singapore as a place they want to have their roof, I don't think it is going to totally deter them to come into Singapore. Rental might be a possible option, which means I think some of the bigger properties and the luxury properties, the rent will stay firm and may even be in greater demand.
And while this may be good news for landlords, there are concerns on the impact that it will have on the many locals in the rental market.
We have noticed that more tenants are shifting downstream. So this means that we have observed more expats and even locals who are shifting, some of them they are shifting from the luxury market to city fringe and from city fringe to suburban area. And for some of the expats, they are even going to the HDB market. So therefore, recently we have noticed that HDB market rents have been rising across the island and in some locations as well. And we do notice some of these record rents that has been achieved. For example, there was a unit that was rented for $6,500 per month. And I think this is the highest rent that has ever been achieved. And there has also been some units that were rented for more than $5,000 and for $6,000. And for the lower tier of those units rented out for, let's say, for example, less than $3,000 or $2,500, the proportion has been decreasing over the past few months. So this means that affordable rents, even in the HDB market, has been decreasing over time.